Hello everyone and welcome back to our financial market analysis channel. In today's video, we will forecast the gold price for the next trading day. Our main focus will be the global gold market, and especially the gold market in the United States. All analyses are based on macroeconomic data, actual market movements, and information from official and reputable financial sources. This video is not investment advice. It is for analytical and reference purposes only, to provide investors with a broader perspective. The global gold market is currently trading at very high price levels. Gold prices have continuously set new record highs recently. This reflects growing risk concerns among global investors. Gold continues to act as a safe haven asset, especially amid economic and geopolitical uncertainty. The United States plays a leading role in global gold price trends. Policy decisions from the U.S. directly impact gold prices, particularly monetary policy from the Federal Reserve and key economic data releases. These factors form the foundation for tomorrow's gold price forecast. The U.S. economy is currently in a sensitive phase. Inflation has shown signs of easing but remains elevated. The Federal Reserve maintains a cautious policy stance. Markets are expecting potential monetary easing ahead. This expectation is supportive for gold prices. The U.S. dollar has recently shown signs of weakening. A weaker dollar makes gold more attractive, especially for international investors. U.S. Treasury yields have shown signs of stabilizing. This reduces pressure on gold prices. In the first scenario, gold prices may continue to rise. This is the scenario favored by many investors. The first reason is continued weakness in the U.S. dollar. When the dollar declines, gold prices typically rise. The second reason is expectations of Federal Reserve rate cuts. Lower interest rates reduce the opportunity cost of holding gold. This encourages capital inflows into precious metals. The third reason is ongoing geopolitical risk worldwide. Conflicts and tensions remain unresolved. Investors continue to seek gold as a hedge against uncertainty. The fourth reason is market psychology. As gold repeatedly sets new highs, momentum strengthens. Retail investors tend to follow strong trends. This creates additional buying pressure. The fifth reason is continued gold purchases by central banks. Many countries are increasing their gold reserves. This provides a solid fundamental base for gold prices. In the short term, gold may test new resistance levels. The market could maintain its upward momentum, especially if no negative U.S. data emerges. Global gold prices benefit from international capital flows. Gold investment funds continue to hold large positions. Safe haven demand has not left the market. Global inflation remains a concern. This reinforces gold's role as an inflation hedge. Major economies are showing signs of slowing growth. This makes investors more cautious. Gold becomes a preferred defensive asset. In this scenario, gold prices may rise steadily and remain elevated in the next trading session. In the second scenario, gold prices may correct lower. This possibility cannot be ruled out. The first reason is profit-taking pressure. After a strong rally, investors often lock in gains. Profit-taking can occur on a broad scale. This creates short-term selling pressure. The second reason is stronger than expected U.S. economic data. If data exceeds market expectations, rate cut expectations may be reduced. This would be negative for gold prices. The third reason, a potential rebound in the U.S. dollar. When the dollar strengthens, gold typically faces pressure. U.S. Treasury yields could rise again. This makes gold less attractive relative to yield-bearing assets. The fourth reason is improving risk sentiment. When markets become more optimistic, capital may rotate back into equities and flow out of gold. In this scenario, gold may experience a technical correction, but this does not necessarily signal a trend reversal. The U.S. market is highly sensitive to economic data. A single strong report can quickly shift sentiment. U.S. investors tend to react aggressively to news. This increases short-term volatility in gold prices. If the Federal Reserve signals a more hawkish stance, gold could face selling pressure. However, the downside may be limited, because long-term fundamentals remain supportive. This may simply be a healthy correction, allowing the market to rebalance. The bullish scenario reflects the current dominant trend. The bearish scenario reflects short-term risks. The probability of a price increase is currently higher, but short-term volatility is unavoidable. The gold market is at a sensitive level. Any major news could trigger sharp moves. Investors should closely monitor the U.S. market, especially key economic data releases and statements from Federal Reserve officials. These are critical drivers for tomorrow's trend. Global gold remains in a long-term uptrend. The U.S. market plays a decisive role. The U.S. dollar is a key factor. Interest rates and rate expectations are crucial. Geopolitical risks continue to support gold prices. However, profit-taking pressure always exists. Investors must manage risk carefully, avoid emotional decision-making, maintain a clear strategy, and follow strict discipline. Gold prices may be highly volatile in the short term. The U.S. market often reacts strongly during data releases. Short-term traders should be especially cautious. Long-term investors should focus on the broader trend. Do not panic during temporary pullbacks. Corrections are a normal part of markets. What matters is the bigger picture and underlying fundamentals. Gold remains an effective hedge asset in an environment of global uncertainty. To summarize, there are two main scenarios for gold prices tomorrow. The bullish scenario is supported by a weaker U.S. dollar and expectations of Federal Reserve easing. The bearish scenario is driven by profit-taking pressure and strong U.S. economic data. The long-term trend still favors higher prices, but short-term developments must be monitored closely, especially developments in the U.S. market. We hope this analysis has been helpful and provides valuable insight for your decision-making. If you found this video helpful, please like the video to support the channel and subscribe so you don't miss future updates. Share your thoughts on tomorrow's gold price direction. Do you lean bullish or bearish? Thank you for watching until the end. See you again in the next market update.